So what I want to do now as we wrap up our session here is I want to address some of the questions that were typed in. So this is our Q&A portion. I know I won't necessarily get to everybody's question, and again, I hope that for a lot of you this kind of division of the 45-45 split was helpful in terms of kind of covering the basics the first 30-45 minutes, and then getting into more advanced application the second half. That way we can kind of appeal to those of you that might already have had some Fibonacci experience versus those of you that didn't. And regardless, what we're able to do is kind of freight train our way through the presentation, where I can start off simple, we can end off with more advanced application of the tools. You know, obviously I can't start off with A, B, C, D and start pulling Fibonacci levels. We're going to lose half the group, right? So hopefully this worked out well. All right, so let's go ahead and tackle some questions here as we wind down our session. Again, thank you for your time. And if you have a question, I'll see if we can get it. If it's off topic, I'm probably not going to handle it today because I want to keep the topic on Fibonacci. So you have all the lines and levels again that you want to keep on your Fibonacci study. Got a question here. What is the best way to make sure that the fib is drawn in the real direction of the trend and not a temporary retracement of the trend? Well, hopefully we kind of addressed that. This was Michael's question. Hopefully we kind of addressed that, because you'll notice that sometimes you are going to, again, when you say real direction of the trend and temporary retracement, if we're going to do that, then we have to start thinking about the angle of the wave, which we certainly should. You will not always have a last major move that is going to be in an uptrend rallies. You don't want to think that way when it comes to Fibonacci, because if anything, in actuality, Fibonacci's capture correction. So in a rally, if you do have a move higher from A to B, it's going to yield support levels heading lower. Okay? Could you have support levels helpful as corrective entries for a buy in the context of an uptrend? Sure. What about if the market wants to reverse, or if the market's breaking the wave? In those cases, you might want to look for a last major move that might want to identify other levels that will be pertinent to what you need to identify. You got to ask yourself sometimes, do I need support or do I need resistance? Because if I need support, if I'm looking for support levels on the chart, I'm going to be focused on rallies. Okay? If I need resistance levels on the chart, I'm going to be focused on sell-offs. Okay? So don't get too fixated on picking one side or the other. That I'm only going to look for rallies, or I'm only going to look for sell-offs because of the direction of the trend. Look for the last major move. Don't let the bias of the underlying market necessarily color it. Just ask yourself sometimes, do I need resistance or support? That will, number one, help you and keep you from looking at your last major move with too much bias. As you notice, I didn't discuss trend at all here, did I? And you guys know, or at least some of you, I'm sure, understand how important trend is to me, how important market cycles are to me. But when you're trying to use Fibonacci, you're better off not going in with a bias with the trend, because you're just trying to identify support and resistance. So thank you for that question, and hopefully we addressed it through that last part there. Okay, so in terms of different time frames, my recommendation, my opinion is that you should draw the Fibonacci's based upon the time frame that you are most likely trading. You guys know that I advocate an approach that basically says if you're trading a 60-minute chart, you basically set up everything in terms of support, resistance, chart patterns, indicator readings, everything on the 60-minute chart. You do not jump time frames, because a 60-minute chart is reflective of that 60-minute psychology. It's going to be reflective of the wave. In fact, the wave is going to be dictating how you're going to be trading that time frame to begin with. So I don't advocate jumping around time frames. Even when it comes to a Fibonacci, I don't advocate, if you're looking at a 1 hour, jumping up to a 4-hour chart. The touch points could be very different. The market cycle could be very different. The support and resistance on a 4-hour is going to reflect a 4-hour psychology. It really has no place in the analysis of a 1-hour chart. So stick with that time frame. And not just for Fibonacci, but for all your analysis. The only exception to that would be if the daily chart is hitting some sort of key level, like a 200 period simple moving average or some sort of psychological level. But if it is a psychological level, you'll see it on the short-term intraday time frame anyways. Okay, so really a 200 period simple or events that are very key to a wider psychology that often occurs on a daily, like a doji on the daily or something like that. Okay, those would definitely be reasons to look at a daily chart, but I wouldn't jump around on intraday charts. And again, the only reason I picked that daily is because it is the most psychologically relevant time frame. The question about Fibo and Elliott wave, I by no means am any kind of Elliott wave expert. I have general knowledge of Elliott wave, but I would not by any means call myself an expert at Elliott wave. I will say though, like any other analysis, I feel that Elliott wave, when used within the context of a trend, and you know, you determine the waves like that, it's very powerful. But I also feel from my experience, looking at analysis from Elliott wave experts and then doing Fibonacci analysis, that oftentimes you're going to end up with a very similar set of support and resistance levels. You'll have more levels to consider with Fibonacci, which is both good and bad. Elliott wave will narrow them down to basic key turning points. But I think you'll find that a lot of times Fibonacci and Elliott wave will overlap at those key levels. And when they do within the context of a trend, I think you have excellent confirmation. That's just my opinion. And again, keep that in mind. I am not an Elliott wave expert by any stretch of the imagination. But I do feel that Elliott wave is best applied in a trend because you really don't have waves of buying and selling in a sideways market that I think are going to be applicable to what Elliott wave is trying to measure. I think Elliott wave is a fantastic tool within a trend, not so good in a non-trending market. Okay, so you have my setups. You will have to do some customization on your Fibonacci, but it will only be that one time. Okay, so make sure you go over your Fib levels and you type in those levels that I talked about already. And if you do that at $, you'll get your price on the description so you can see what price level the Fibonacci is plotting at as well, because that is not default. You have to add in that at $, to get the price added on to it. Okay. As far as short-term time frames, I usually recommend to people who are brand new to Fibonacci, don't concern yourself with time frames shorter than 15 because you'll probably drive yourself crazy. Okay, I think on short-term time frames like a 5, you're much better off using pivots, and you're much better off using psychological levels because of the objectivity and the simplicity and usually the automation of just having those lines and levels easy to find. Because 5-minute chart setups can come at you very quickly, I don't think you have the luxury of time necessarily to do the things that we did on the longer-term intraday time frames. So I don't necessarily advocate using it on shorter-term time frames. I think psychological levels and pivots work fantastic on short-term time frames like a 5-minute. Okay, so again, that's just my 2 cents there. All right, let me see. Got another question here. Just bear with me. I'm just kind of scrolling down the list here.